Hello guys, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. Short video, short webinar, half an hour, where I will tell you what's going on the market, and we'll try to look for decent trading setups. As always, we start with the macro calendar. We got important news. Well, let me switch that for today. Important data from Australia. CPI came worse than expected. As you can see, the consensus was 0.8. It came 0.6. Here, instead of 2%, 1.8. This was a very negative information for Australian dollar. And we saw a huge decline in this currency, and actually on few instruments we have a trading signal, for example on Australian dollar to American dollar. Today we got an IFO from Germany, which came better than expected. It's a very high number now, and also better GDP from Great Britain. What we are still waiting for are core durable good orders from US, pack of data from housing market from US as well. But the most important event for G10 currencies will be here interest rate decision and rate statement from Bank of Canada. So we expect a bigger volatility on Canadian dollar today, and also in the meantime, in 2.5 hours, we will have EIA crude oil stocks change. Maybe this can help to trigger a buy signal on oil. WTI oil is very close to breaking the horizontal resistance, which I will show you in a second. From the technical point of view, from the fundamental point of view, apart from the calendar, what we had, we had a poll among Republicans, and they prefer Taylor over Powell, and this information helped American dollar because Taylor is considered as a strong hawk. So that was like a very important event. Apart from that, we are waiting for Thursday. For tomorrow, ECB, remember, we are about to see a tapering tomorrow in a QE, and everybody's waiting for that. So, for example, that's why DAX is moving more of a sideways trend, and we shouldn't expect any bigger movements before that. We had this meeting of the Communist Party in China. It has ended, and this meeting is considered as a triumph for President Xi Jinping, it also is. I think it's a positive information for stocks. Apart from that, that would be it. So everybody's waiting for this ECB on Thursday. Today, watch out on the Canadian dollar for possible strong movements. And yeah, let me turn on the charts right now. Maybe let's start with Bitcoin, because Bitcoin from Monday is undergoing correction. You saw that yesterday. We're somewhere here. We dropped below this horizontal resistance, and after that the correction just continued. So we broke this uptrend line, and as you can see, it was respected twice. We came to test the second trend line, this black one, and actual bounce happened on the red uptrend line, which is connecting higher lows since the middle of September. And we had a contact here, and here. And look at that on the H4 chart. What do we have here is a hammer candle, which is a positive candlestick. From this point, the price should aim higher. What I'm missing here is a correction quality pattern. So this correction was almost the same as this one. We missed like few dollars on it. It stopped like on 5,000, let's say 400. Yes, $100. We missed even less. Yeah, $100, $80. But the uptrend line was protected. And as long as we stay above the red uptrend line, the sentiment is positive, and we should see the breakout of the upper line of the wedge formation and this horizontal resistance here. In case of the breakout here, we can have this correction equality pattern, but most probably, well, after the breakout of after the denial of the correction equality pattern, we should see a movement to here, $4,900 for one Bitcoin, which is a very important support now. So what's the scenario for Bitcoin? Well, as long as we stay above the uptrend line, the sentiment is positive. In case of a breakout, we should see the movement to $4,900 dollars for one Bitcoin. But with the price action from yesterday, from today, what we should see is a breakout of the upper line of the wedge. So the sentiment is still positive as long as we stay above $4,900 dollars for one Bitcoin. That's how the situation looks like. I told you about oil. We are waiting for the CIA crude stock exchange, and this can be influential for WTI. What we are doing here, what the price is doing here is price is in a channel up formation, and most recently in the ascending triangle, and both of those formations are bullish, right? So are pointing north. What we should get here is a breakout of this red resistance. It was tested again 1, 2, 3, 4, 5, 6 for the sixth time, and as you can see so far the bounce is very limited. Like the price is still having is putting a big pressure on this resistance, which shows us that maybe supply is abandoning this level. Sellers are escaping from the short positions, and most probably what we should have is a bullish breakout here. And the best situation here would be breakout of this horizontal resistance, and the price should aim the upper line of the channel up formation along with this horizontal resistance here marked with the gray color. So eventually after the breakout of the red resistance, the price should get here, so to 50 like $55 per barrel. Now we are on 52.3, so $2.5–3 higher. That would be very pretty significant movement, especially that this gray area are yearly highs which were made at the beginning of the year. Really, buy stop order here wouldn't be a bad idea at all. I think that there is a potential for a nice upswing on oil, although not mentioning the fact that in the long term I'm negative for the price of the oil, but at the same time I'm a price action trader, and my job is to read the charts properly, not to I'm not an economist, so I don't try to predict the future. I don't try to predict the price in the next few months. Actually, I don't care what the price will be in the next few months. What I care is earning money on the market, and that's the difference between traders and economists, right? So my view currently on oil, despite the fact that I'm in the long term I'm negative, it's bullish right now, because that's what the technical analysis is trying to tell me. Technical analysis is sending me those signals. Next instrument is Australian dollar to American dollar, which was negatively influenced by this worst CPI data. And that is a game changer for this pair, because for a long time this pair was in an ascending triangle pattern, and the price broke this horizontal resistance in the middle of June, and the price went significantly higher. So there was this horizontal resistance here, which was created actually in the August 2016. We had November, we had February this year, we had March this year, and after the breakout it became support in the first half of the month. And now we have a breakout, and that breakout denies this buy signal here and activates the sell signal. There is a sell signal already, even despite the fact that we do have this head and shoulder pattern, left shoulder, head and right shoulder. So we don't need to wait for, and we don't have a breakout of the neckline, right? This is a negative pattern, but it's not active yet because we don't have a breakout of the neckline. But we do not have to wait for the breakout of the neckline because the breakout of the horizontal support is significant enough, and it triggers a sell signal, and the potential target for this is 150 pips, which makes it a good idea. Two options, like the comeback here and testing this area as a resistance is very probable, but it does not have to happen, right? So now it's just a matter of risk to reward ratio, right? So if we are here, potential like stop loss can be here on 100 pips, can be here on 60 pips. The potential target is 180, let's say 150, 160. So it just depends where you will enter. I'm not the biggest fan of entering the short position when we had like non-stop 200 pips downswing. I would wait for a correction, and actually this kind of movement here would be more than welcomed, and I would try to sell somewhere here. So yes guys, that's the situation on Australian dollar to American dollar. American dollar to Canadian dollar, next one. Remember, we will have influential data today, but the movement that we were anticipating is being continued. So after the breakout of the upper line of the triangle and after the breakout of this horizontal resistance, this movement is continued. After that, actually, we already made like 100 pips, and as we said, the potential target for this movement is here, but it's all up to the BOC statement, right? So technical analysis finishes here when there is an interest rate decision, when there is a statement from the central bank, and that's the place where the technical analysis finishes, and our attention is switched to the fundamentals. So yes, we had a nice reaction here. Now time for the fundamental analysis to show us a direction. Maybe we can do something like that we can have a bigger correction here. Okay. Yes, let's go like that. That will be also a nice potential take profit level, like a rise here and then a correction somewhere here, let's say. And DAX, before ECB, the volatility is just very, very poor. Here the resistance, here the support. Okay, and most probably will stay in this range till ECB tomorrow, and after ECB tomorrow we will have a movement triggering a proper trading signal. So as a trader, again, as a trader you don't care if the price will go up or down. As a trader you just wait for the breakout and trade the breakout. That's what traders do. You're not economists, you don't care about the movement. You care about earning money. Euro to British pound. British pound got stronger after the GDP data, and we are actually on a weekly lows, which is well, pretty good for the British pound, especially that on Monday we wrote an analysis that the downswing is more probable here, and we should aim this uptrend line. Why the downswing was more probable? Well, because we had a nice downtrend, then a correction, and only this setup was very powerful. So this setup was like a 50% retracement here, and it was done with a shooting star here and a bearish engulfing here on the daily chart, shooting star, bearish engulfing, and that was a very strong sell signal, and now we have a reaction of that. Obviously, we had a small help from the fundamentals, but sometimes it's like that fundamental analysis and technical analysis, they come together. Euro dollar. Euro dollar is also locked in a sideways trend. It's not very interesting here because again we are waiting for the CCB and we should get a trading signal here as well. So breakout of the yellow resistance should trigger a buy signal. Breakout of the blue support should trigger a sell signal. That's what we are waiting for on this instrument, and hopefully I will be there to trade that. Australian dollar to New Zealand dollar. Well, both of those currencies are negatively influenced, but New Zealand dollar by the political risk, Australian dollar by the weaker data. So that's why you can see a bit of a roller coaster here. Now Australian dollar tries to recover. Like here we had the negative data for negative fundamentals for New Zealand dollar. Here we had negative fundamentals for Australian dollar. This place is not random. As you can see on a weekly chart, it's a long-term resistance, so maybe it's a good place for a reversal, but it's also a good place for a breakout. But well, I would say that with a positive data from Australia, breakout would be just a matter of time here. But now we have this bad data from Australia, so maybe it's not so obvious. American dollar to Mexican peso also defends the long-term horizontal resistance, that's 38.2. Yesterday I was telling you about this shooting star here, and yeah, there was no shooting star. So shooting star was around that time, but if you're going for a setup on a daily chart, it would be nice to wait for an actual daily candle, right? You cannot trade the daily candlestick when it's the middle of the day, because everything can change in the next hour, 2 hours, 5 hours, right? And that's what happened here. We had a nice shooting star during the day, but this denied this shooting star and the price went significantly higher. Now we can see that this resistance is defended, and now the price made new daily highs, but still the sentiment is not negative here. We are currently, the bigger chances are for the breakout, unless we will have a downswing here and we'll close, we will create like a reversal pattern here, but a bit too late because we won't get an engulfing here because the body is lower, the opening is lower than the closing here. So all we can get here is like a shooting star, or maybe just a long bearish body here in this candle. And dollar index also waits for the ECB, because dollar index is 70% euro, around 70% euro. Both scenarios here are still on the table. A bearish scenario, which is created by this flag formation, and a bullish scenario, which is created by this inverse head and shoulder formation, left shoulder, head, and the right shoulder. Breakout of the neckline will trigger a buy signal, and breakout of the lower line of the flag and this horizontal support should trigger a sell signal. Simple as that. As always, there are two ways. So you maybe think, okay, what is he telling you? What is he talking about if there's always a two ways? All right, but it's very important to estimate the places where you have an actual trading signal, right? And we do have those places here. They're pretty clear. So when the price will get here, you sell. When the price will get here, you buy. As for now, there is no trading signal, so there is no point to enter this market. Silver is having this correction pattern, but in the same time we broke 16.8 support. Well, we are about to break it. Actually, we should get like better here. Yeah. It does not look good. It does not look good. In case of a breakout, the next support is here on 16.5. Buy signal will be created when we will break the upper line of the wedge formation. Gold is not doing good either. We have a strong decline here. We are aiming this ultimate support here. I'm actually waiting for the price to get there. And that will be very interesting to see the price reaction there. So I'm gonna move it like here. We have combination of few factors. So we have long-term uptrend line, we have long-term downtrend line, we have a horizontal support created by this low, and we have combination of two Fibonacci's 38.2 and 61.8. So that's a potential place for a nice bullish upswing. Euro to Japanese yen just made new midterm highs, actually long-term highs. We are not surprised because we had signs for that here. As you can see, again, two signals, right? That's what we are doing. The price was in a sideways trend and just wait for the breakout, and we posted that like even last week. And the price broke the upper line, which triggered a buy signal, and now we have a result of that. The price made new long-term highs, which is pretty nice. Cable, after this better data, the price is just heading higher, so they don't care about those rumors from the Brexit negotiations. They are just heading higher. We can consider that as a symmetric triangle, as a pennant. It doesn't matter. Well, it's a symmetric triangle because it was created since the beginning of October. Yeah. The aim for this movement is 133 here. British pound to Japanese yen. We do have a breakout of the upper line of the wedge, so this wedge is denied. That's no longer a pattern here, and there is a buy signal here. You remember that we are telling about this bounce from this horizontal support here, and look at that, it's happening. It's a very good trading occasion. It was a very good trading occasion because after the bounce from here the price made like 350 pips. That's a combination of two factors here on British pound to Australian dollar. So look at the movement. Good data from Australia, good data from UK, bad data from Australia. That's why we have such a strong movement of 360 pips in one day. Right? We'll have a nice Marubozu here. What is important is the fact that Marubozu break the horizontal resistance here. Right, so the price breaks this horizontal resistance and the target is 300 pips more. And that's like a legitimate trading occasion. I think it's a strong buy signal here on British pound to Australian dollar. Even despite the fact that we had such a strong movement here, I think that we can get a correction like here, and from this point the upswing should start. American dollar to Swiss franc, also after breaking this trend line and this horizontal resistance, there is a buy signal and the price continues to rise. So there is a proper buy signal also on American dollar to Swiss franc. American dollar to Russian ruble. Downswing flag, downswing smaller flag, and probably another downswing. The only obstacle here is this uptrend line connecting recent higher lows. American dollar to Polish zloty broke this uptrend line which connects higher highs, higher lows in the past few days, which activates sell signal again. S&P 500 locked in a sideways trend, the same as DAX, but obviously on S&P 500 there is a permanent buy signal. It does not matter how big was the correction, but there is just a permanent buy signal. And New Zealand dollar to Singaporean dollar continues the drop. After we saw this breakout of this horizontal support, the price just continues to go down with the potential target here. So that's also the setup that we are talking about yesterday. So you can see a few nice trading occasions: Australian dollar to American dollar, British pound to Australian dollar. Cable looks nice, and on some of the instruments we have potential trading setups, but we have to wait till the end of the day, like for example American dollar to Mexican peso, and on many or American dollar to Canadian dollar, which we have to wait for the Bank of Canada, and on many instruments we'll have answers tomorrow after the ECB, like for example DAX or Euro dollar. So this week is pretty successful in terms of the number of occasions, and yeah, thanks very much for watching daily analytical report. For more occasions, please visit our Twitter account and our website alpari.news.